Imagine waking up tomorrow and 7 stocks have just wiped out half of your portfolio. That is the real risk hanging over markets in 2026, and most Forex traders are completely unprepared for it. Today I want to show you how to think defensively before the AI bubble cracks, because the spillover into Forex will be brutal. Right now, the Magnificent Seven make up roughly a third of the S&P 500. Nvidia, Microsoft, Apple, Amazon, Meta, Alphabet, and Tesla are no longer just stocks. They are the index. When sentiment shifts on AI capex, on data center returns, or on a single earnings miss, the entire market moves in one direction at the same time. That kind of concentration has not been seen since the dot-com era, and it bleeds directly into currencies. Here is the chain reaction I am watching. First, if AI growth disappoints, risk assets sell off. The Nasdaq leads, the S&P follows, and volatility on the VIX explodes. In that environment, the Japanese yen and the Swiss franc become magnets. USD JPY can drop hundreds of pips in days, and dollar-franc collapses as carry trades unwind. If you are long risk currencies like the Aussie or the Kiwi during that panic, you get steamrolled. Second, watch the Fed. A real equity crash forces them to cut, and cut hard. That weakens the dollar against the yen and franc, but it can paradoxically strengthen the dollar against emerging market currencies as global liquidity dries up. The dollar smile is your roadmap here. Third, gold. XAUUSD has been the cleanest defensive trade of this cycle. Central banks keep buying, real yields are softening, and any equity panic adds rocket fuel. I am not telling you to chase it at highs, but pullbacks into prior breakout zones are gifts in a crash scenario. Fourth, Bitcoin. Treat it as a high beta risk asset, not digital gold. In the first wave of a crash, it usually drops with tech. Only after the Fed pivots does it tend to recover. Plan accordingly. So what are the practical lessons? Cut your position size now, before volatility expands. Build a watch list of safe haven pairs. Pre-decide your levels on gold, USD JPY, and USD CHF. And stop holding correlated risk-on trades across multiple pairs, because in a crash, they all become one trade. Markets do not crash because of one headline. They crash because everyone is positioned the same way. Do not be that trader in 2026. Comment the word defense below if you want my full crash playbook in the next video.